Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite and the road ahead in the markets. The Indian stock market ended the week sharply lower, snapping a 2 week winning streak, dragged by global trade tensions due to Donald Trump's tariff hikes, which spooked investors across the domestic and the global markets. The sell off was broad, with everything from large cap to small cap stocks hemorrhaging. Nifty fell 2.61%, while broader market recorded losses of 2.5% in mid-cap and small-cap indices. Key highlight of the week was the global event where the United States imposed tariffs on its trading partner countries and now has an average weighted tariff rate of 18.3% on all its import, including a 27% levy on select Indian goods. This is much higher than what the market was expecting, and as a result, even US market crashed with Nasdaq down by 9.77% this week. This move reignited fears of global trade war, prompting a broad-based risk aversion across emerging markets and money moving away from stock markets to safer assets. Rising economy uncertainty and fears of recession in the US are driving US stock market investors towards safer investment options such as government bonds. A steep decline in the US stock market further dampened hopes of recovery. Adding to the woes, foreign institutional investors, FIIs, who has turned net buyers for a brief period of time, resumed selling in the Indian stocks, deepening the bearish mood. The bad news is the current tariffs are a huge setback on global growth and will definitely lead us to a major slowdown as many big Indian companies draw a lot of export revenue. China, which is a big economy and less dependent on US considering semiconductors and other high-tech imports, is also not backing down. Instead, has announced its own set of retaliatory tariffs. The European Union has also indicated that it is keeping all the options open, including responding with countermeasures and going after big tech companies if talks with the Trump administration fail. Now, the good news is that this is the bad news as it can get for India, and there will be a lot of negotiations and deals to be made from here on, which should help reduce the tariffs on Indian exports to US going ahead. Another problem is uncertainty over US Fed interest rate trajectory. Experts are divided over the prospects of rate cuts in the US. While some believe Trump's tariff could slow the US economy significantly, prompting quicker rate cuts from the Federal Reserve, others remaining cautious. US Fed Reserve Chair Jerome Powell on Friday hinted that a trade war may cause more damage than expected. He mentioned that the US faces a highly uncertain outlook with elevated risk of both higher unemployment and higher inflation, and that the US Fed may not cut rates at a hurried pace. From a technical perspective, Nifty immediate support lies at 22,600, while a decisive breach could open the door towards 22,100. On the upside, any recovery is likely to face stiff resistance in the 23,100 to 23,500 zone. On the sectoral front, most sectors bore the brunt of the fall. Heavy selling was seen in IT and metal stocks, which emerged as the worst performers on worry that a potential recession in the US economy can occur. In the current setup, traders are advised to maintain a sell on rise strategy for the index until a clear reversal or a retest of 22,100 support level occurs. As earnings season begins, stock specific action is likely to dominate, presenting opportunities on both the long and the short side. In the coming week, RBI will announce its rate new policy and the Q4 FY25 earnings season will start early this week. While market focus will shift towards these events, the uncertainty caused by tariffs will remain in front. In such times, the best course of action is to do nothing. Trading in such volatile times is an easy way to lose capital. Concluding, we believe tariff uncertainty is likely to rattle the markets for the foreseeable future. Trump's team has characterized the market turbulence as an adjustment that would prove beneficial in the long run, which only time will tell. Until there's actually a change in the policy or evidence of real negotiation going on, the market's going to be under pressure. India, too, is engaged with US authorities to find a way out of the tariff tussle. Till then, the traders should be on a wait and watch mode, and long term investors should start taking positions in quality stocks as and when the results of those companies are out. That's all for today. Wishing you a profitable trading week ahead. Thank you.